Hi everyone, this is April 27, 2022, and you're watching the Awesome 10X Philippine Market Update. Let's begin. It's a Wednesday, so PSCI is now trading at 6,843 points. It's down 136 points, or down 2%. Let's take a look at the top traded names. You've got SM hitting $850. Actually, let's just go to the index first. The index movers today, and then we'll go to the top traded. So let's go through it first. Index is trading 3 billion. You could see very low volume, very low value traded, and a lot of losers, 145 decliners, only 38 advancers, which means that it's a 1:5 game, 30 to 150. And you've got a lot of issues all falling down with a lot of selling pressure. So let's take a look at that level. Index movers, let's just read through it first. Converge is 2960, Meralco is 347. Those two are the ones in green, the rest are all in red. Mega World is down 2.89, Monde is 13 bucks, Robinson's Land is 19.6, Luciatan Group is 8.63, MPI is 3.8, Wilcon is 28, Emperador is 19, Security Bank is 104, Pure Gold is 34 bucks again, San Miguel Corporation is 105, AGI is 11.8, Asan is 8 pesos, GT Cap is 507, Aboitiz Power is 32.9, PLDT is 18.96, Jollibee is 217, URC is 105, Metro Bank is 53, Globe is 23.80, BDO is 129, BPI is 95, ICD is 218, Ayala Corp is 738, SM is 850, Aboitiz Equity Ventures is 53.9, JG Summit is 56, Ayala Lands 34, SM Prime is 35.50. I don't have any good news to share to you except that the Philippine market going down is a validation on why we were very cautious at 7.2 and 7.5. So we are expecting a whole reason for the market to sell off, and it's actually translating today. Now, we are seeing actually globally that is also the same. The world is grappling towards recession. The earnings results of Netflix is indication of people cutting their cutting their subscription. You're seeing the Russian-Ukraine war affect a lot of inflationary pressures. European spending has been in a decline, which actually translated to a negative print for Google after hours. You've got the big companies selling off and barely beating expectations. So my assumption here is that despite all the cash flows running in the system, obviously the US printed a lot of money, and that money translated to higher stock prices, keeping those market valuations elevated. It it is true that with the entire world's biggest companies falling down, that there will be very little liquidity coming into the Philippine market, and that is obvious. You can see in the index movers here that your top traded names all on the red here, and the market is slowly pricing in also a sell-off on the REITs. We have been discussing how weird it is that the REIT was trading at double when it traded almost 50 bucks, so it was 50, 52. Right now you're seeing REIT fall down to 40 pesos. And you know what? The truth of the matter is that all of the office spaces in the Philippines are not immune towards a recession. So we would say that companies would have a harder time paying rental. Yes, the economy has reopened, but that doesn't mean that the companies can pay high rent for an extended period of time. So you're seeing already the REIT fall down 51 to 40 bucks. So I guess it can fall as low as 34. There's no sell off here that is ending, as I don't think that the property segment is immune to any sell off, especially in a recession. You're seeing MREIT fall 23 to 17. It's possibly going to fall further. Let's take a look at the Robinson's REIT. What's the name of that Robinson's REIT? Robinson's Real Estate Trust is, so I'm not even aware. RHR something RCR. I think it's RCR. RL Commercial REIT. Yeah, that one. It's also falling down. So you're seeing already the REITs are also getting trouble. So here is what I'm saying, that even the dividend related names at some point will hit their marks. And that is something that is obvious for everyone, I think, who are in the industry. So in the industry, we know how difficult rental spaces are really in getting rentals. Either the rentals are lower yields or barely getting occupied. So operational wise, you're seeing that translate to your big caps, your Ayala Land. Let's take a look at your property segments here. Ayala Land is falling down, of course, at $40. We were saying, hey, that is a resistance, and it's now trading near support. How low can the support be? Well, if you're gonna really gun for the lowest support for Ayala Land, it's gonna be about 31 to 32 pesos. So we're still gonna wait a lower drop. We're still waiting. As I said, PSEI, we are of the conviction that we can possibly buy it at 6.3 or 6.4. It's now 6.8. We think that 7.275 was a resistance area. So for a while now, it has been very little liquidity for me to get engaged in the Philippine market. I know it's a little bit boring that every single week, all I say is that, well, there's nothing much to discuss in the Philippines except that we are still avoiding it and we are still in an inflationary environment. But you can see that there is a reason why we are bearish. There is a lot of reasons to really postpone any buying as these are resistance areas. So PSCI is here high, still dropping. You're seeing that breakdown here at about 6.8. And the catalysts are really lower sales. So you're seeing that earnings are not coming and you'll get downgrades, obviously. So let's just take a look at all of the big caps here. SM Investments is trading lower at 900, so we're bearish ever since, no? It's been a while, we're still bearish at 850, it can go $800. I'm not gonna hear cheering on for SM to be bought. I think it's gonna fall further, so just let it drop. AC, you know that the business of AC is a lot tied with the real estate. So although AC has been engaging a lot in the energy sector through ASEN, I would say that that is not a profitable business for them so far. They're still spending a lot on it. So this is still bearish for me, even at 750, 740. Wait at about 680. You're seeing that that 680 mark has been the same price for the last 5 years. There is a reason why Ayala Corp cannot be above 900 pesos. It's because the business is tied to too much on the real estate sector. So you know that the Philippines is really in an economy that is reliant on consumer spending. If you have consumer spending getting crippled because of oil prices, that means that this 5 year desert of AC can extend all the way to the next 7 or 8 years. So, I mean, even until 2025, can Ayala Corporation break above 900? I'm not too confident in that. However, Ayala Corp is Ayala Corp. Yes, I know. It is an extended desert. If you ask me, define Philippine market, well, it's an extended bear market. I don't think that Ayala Corporation will be immune. Whoever wins the elections, whoever wins, actually, it has nothing to do with the presidency. I would say that they could perhaps just sleep for the next 5 years. So yes, it's a cash flow driven business. Ayala Corporation has businesses overall in Globe, BPI, Ayala Land. These are great businesses, notwithstanding. But the market is obviously just willing to buy you if you are willing to also shell out a dividend, and that is evident on Globe. So amongst all the bearish ideas I have, my idea though is that if you're gonna park, no choice, but you just really park on dividend names. So Globe will still remain a buy. If it goes to 3 to 2,000, I would be on the buy side here, simply because, you know what, there is still defensive businesses in the Philippines that exists. However, they may be very small and they're few. We've seen how the Philippine markets, like banks, have been relatively a safe haven, but only once a year do they pay. So Metro Bank, I would say, you know what, you fall at 48 or 46, definitely there is a buyer here. So how low is that? Well, that is 5 to 10% lower, which means that if the index falls 6.5, 6.4, will I be willing to deploy some cash in the market? My answer is yes, definitely, but it would be judging where the companies are paying the dividends. So Metro Bank pays about, a decent 2 pesos a year. So if you have it at 46, 48, 2 pesos is 5% dividend, not so bad. And I talked about the preferred shares like JFCPA. So, if it falls all the way down to 950 or 900, it might be interesting to pay, to get some yields on the preferred shares. So I'm not really counting on a lot of numbers to be given by Jollibee. So only the preferred shares will be the more attractive unit, because Jollibee, in my view, is going to have to suffer more decline in sales because of consumer spending decline. So I've been bearish in Jollibee, 250, 260, 240, 217. Even at current levels, I will still be bearish. Now, granted, we couldn't short in the Philippines, so I would prefer that for the short idea, go ahead and short some McDonald's in the US. So I'm looking to short McDonald's, especially on earnings this week. We are going to short these fast food giants. And KFC is, of course, also going to suffer. And Yum already fell down in the US. You could see Yum China falling, even Yum brands already falling before earnings. Does that bode negative towards your companies in the Philippines, not just Jollibee, but also your companies like Shakey's Pizza? Um, I actually believe that Shakey's, I actually sold my shares here at about 820. So I did take a loss here on that decline. And the reason being too high inflation. So can I buy Shakey's potentially at a cheaper price, perhaps here at 6.5? My answer is possibly yes. You wait for earnings to decline. And my sense is that with less consumer spending, it would be affected. So it will take a while before Shakey's will be profitable with their buyout of Potato Corner. Yes, I like the Potato Corner deal, but that doesn't mean that I am not a realist telling you how bad the economy really is. And the economy being bad is akin to every restaurant in the world suffering. So it's not just about Jollibee, it's not about Shakey's Pizza. It has nothing to do with a company. I'm not against these companies. I'm just keeping it real that these companies could end up just being, it's a lost decade, or, well, if not a lost decade, it will not go up. Meaning, as long as they will keep on printing losses for the year, or even if they save some money and they say that they're able to control their inflationary costs or supply chain dilemmas, my answer is, well, Potato Corner has a problem with fries. McDonald's has a problem with fries, sorry. And that is an industry held problem. So whether it be Gardenia Bread having problems, DNL having problem with palm oil, you will of course see that extended decline. So will DNL fall further and further down south? It's just a pity that in the Philippines you couldn't short. I mean, I'm talking about shorting, 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 but you can't do it here. So what do I do? We've been shorting all across the world. So these are just ideas for you to also understand. Um, you know, when I lost some money on my Netflix longs, I protected my portfolio via purchasing a lot of put options. These ended up highly profitable. And I also had shorts, really. And I'm not a genius, I'm just really executing. Who amongst you believes that airlines is going to have a problem because of high oil prices? I believe so. And who amongst you feel that there will be a problem in the future when it comes to consumer discretionary spending? XLY is a consumer discretionary short. How many people can actually buy an iPhone, and how would sales go up if there is a manufacturing lockdown in China where Apple iPhones are being manufactured due to the COVID eruption? So Darden is a short on restaurants. Shorting Darden is just simply shorting a Jollibee. DHI is home builders. Do you think that with real estate roiling with a bubble in the US, that people would really keep on building homes? Homes for whom? Who will buy that home? I mean, even Ayala perhaps had to postpone and just were selling their unsold inventory, which means that as a construction builder, would I be really bullish on EEI or Megawide? I mean, I'm not saying that these companies are bad, but construction builders are really having a tough time. It's going to be tough no matter what you tell me, because who's going to afford a home? Who's gonna afford a house when we have, it's just something that I cannot really see the world waking up into. So I was bearish on GT cap. Why? Because while I saw that the valuation were cheap, I said, well, how many people can really afford cars? Because GT cap's business is Toyota Motors. And if you think that people cannot afford to buy cars, well, then that is a short on auto industry, which is technically a short on GT cap. And what have you been seeing on the worldwide scale? Toyota Motor Corporations is falling down. It has a great sales, but that is possibly the peak of their sales. And then after that, it's just going to go down with so much competition. Toyota Motors is fighting against whom? Everyone. Honda, Tesla, Daimler, Volkswagen, every other startup in the world, whether it be electric vehicles. So the point is, you know what? It's a hard time for automakers. So um, how could I really be bullish on you and tell you that, hey, there's a company to buy? Well, yeah, I did say that Pure Gold at 32 was a buy only because it was trading at 10 times multiple. My God, Walmart abroad is trading what? 40 times multiple? That from a valuation perspective, I'd rather own a Pure Gold rather than a Walmart. Because in the Philippines, Pure Gold is indescribably so cheap. Like, okay, look at this. Walmart is trading 30 times multiple. And even if you grow your sales in the future, which is paltry. Their sales are growing 3% a year, and their sales quarter is like 1%. People are paying 30, 20 times multiple as if it's a growth stock, and Walmart is not a growth stock. So, yes, I do have a reason to short Walmart before their earnings call. And I'm really shorting a lot of these so called discount stores, even if people say, well, these are supposedly safe havens. No, my answer is it's not a safe haven if you pay 20 times multiple, 30 times multiple, 40 times multiple. And in the Philippines, just take a look at the valuations. Is is it really cheap? You tell me. It's not. To me, it's not cheap. Ayala is not cheap, even if it's 34. We have to see the earnings first for me to be convinced that, wow, the earnings are wonderful. But, we are geographically in the same place. I'm in the Philippines. I probably don't need to see the real estate sales segment. You just ask anecdotally, do you believe that people can buy condominiums today? Can they afford houses today? Are the people, obviously, consumer confidence plays a role here. With inflation spiking more than 8% in the US, it's of course translating in the Philippines. Can you really believe if people tell you 4% inflation? I doubt it. So, I have nothing to share to you in terms of positive news. I'm just keeping it real. Let's keep things real. We believe that the market's gonna fall. And the only thing that could save the market is cash dividend deployment. If the companies would pay out, great. So let's just read through a lot of these material information and transactions happening in the market. Boytis Power here says their operating results. All right. So earnings are coming out. And we are of the view that it's gonna be their dividends and earnings that people will pay attention to. Fairness to Aboitiz, they're fine. They're not as bad. So let's just read through it. Aboitiz Power began running, serving their power supply, contributing to the first quarter earnings, successfully synchronized last April 23, well positioned to address the critical market needs. We do expect demand of electricity to grow as an economic resumption of activities of all Filipinos from Luzon to Visayas. And our intention is to keep these generation plants to be continuously serving the energy needs of the nation in Cebu. Okay, so consolidated net income is amazing at about 3 billion pesos. This is lower than 6 billion last year because of a non-recurring loss, primarily due to dollar-denominated liabilities. And without these losses, their income will still be lower 50% year on year because of the damages in the construction of GNPD and business interruption in the GN Power Mariveles energy plant outages, also related to Typhoon Odette. So they're blaming the losses with Typhoon Odette, which is normal. Cebu, you've seen how devastated it was. In fact, I did opine when the Typhoon Odette happened. I was actually thinking, you know what? Would Aboitiz Power get hit there because of the Visayas problem? Because Aboitiz is primarily, of course, serving Visayas region. Okay, that said, despite the losses of Aboitiz Power, I would argue that here at about 30 or 28, people will actually buy it. So these are some names that, yes, you've got the resistance, but there is that reason to actually buy Aboitiz on a dip because there is no other energy-related company in the Philippines serving us with electricity other than Aboitiz. You might argue, well, Asen's there. Well, Asen is not yet profitable and Asen is not yet really deploying as much electricity as we need. So when it comes to Meralco sourcing their power units, it's coming from Aboitiz and Semirara, depending on where you are actually positioned. Are you in Luzon, Visayas, Mindanao? And so Semirara here about 27 or 24 is still attractive even if it's going down. I would say that people actually buy Semirara on dips, and in fairness to it, they would actually be kind of position to buy DMCI at 7 pesos if it actually falls. We're still actually bullish on a very selective few simply because there's no choice. Where else will your money be in? Electricity is a utility, it is a need, right? So that means if Meralco, of course, falls down near about 330 area, which is starting to be happening right now, 320, 315, look at the buying opportunity on Meralco within the next few months. I'm not sure when it will fall there, but patience is a must when you are. Well, in the Philippines, you just really wait. You don't need to deploy your cash because it is not as if it will leave you. It's not a momentum market. You can clearly see the market in the Philippines is low liquidity because every trader in the world knows there's not much to be doing here in the Philippines. It's a waiting market. So yeah, assets of Aboitiz is huge. I could see that while the energy sales have decreased due to lower consumption because of Typhoon Odette, I would expect that that was a one-time problem. Unless you're saying, oh, every year there's going to be a Typhoon Odette. It's possible too. Not saying, kasi climate change It's possible every year may Typhoon Odette, just like what's been happening in the Philippines every November, December, we always have a typhoon, di ba? September, October, November, December, some big natural disaster always happens in the Philippines. 2013, that was the Typhoon Yolanda, and then the Typhoon Odette, and then meron pa, Typhoon, there's just always a typhoon. That's a problem in the Philippines. There's always a typhoon. So that is always going to affect all of your power units pag na-brown out, pag nasira. So there. Let's take a look here. Declaration of cash dividends of PhilREIT. Let's read this. So PhilREIT is declaring 11 centavos. Okay, so PhilREIT is paying 11 centavos, FILRT. So REITs would get demand, 11 cents they would pay every quarter ata yon, so 40 cents. So here, about 7 pesos, people will get it, 5 to 6% div. Okay, let's take a look at the questions here. Utility defensive stocks, 6 to 7% dividend, taxes, worth it? Or are there good uranium plays in the US? Actually, April 21, I had cut all my CCJ uranium plays. I cut my silver plays. I went protective mode on my positions, not because I'm bearish on uranium, but I think that these momentum commodity names are getting stopped out in the short term. I think I will be able to get uranium maybe lower. So like for Eura, I'm looking at about $20. Like right now, Eura is trading at about 26, I think. At 23 na lang. No? So from 26, it fell to 23. Yeah, so I'm waiting somewhere in January when it fell to about 19 to 20. I'm looking to buy it somewhere here. Fundamentally, I do believe that there will be a reason to buy uranium, but I won't be fast in the buying. I think that the market is obviously gripping and panic selling over recession, inflation, Ukraine. These are valid problems. And in some ways, are defensive stocks truly defensive? It's a question mark. To be honest, like for me, I started shorting Walmart. I started shorting Coca-Cola because they are considered defensive. I'm gonna short McDonald's. I'm bearish on DNL. Palm oil prices spiking is negative for DNL. DNL has huge costs with palm oil, and palm oil is like rocking to the moon. So DNL will have a hard time. I mean, in the short term, obviously. So we have to be I don't know if buying dividend stocks like utilities is good, but Meralco hasn't given 6%. So you cannot say, Meralco 6%. Unless Meralco is below 300, then maybe. But Meralco pays 15 pesos a year. So even at 300, it's just 5% dividend. Um, That said, I do believe that utilities obviously are a necessity. So I'm okay to buy Meralco. I've been pitching buying Meralco when it was down to 200 to 240, 250. I just stopped buying Meralco after a certain point in time kasi natataasan na talaga ako sa 330 above. Parang limit ko is makakuha ng 5% good. Pag masyadong maliit na lang yung yield, pinapabayaan ko na lang yan. That's why when REITs were sky high, I was really saying, what's the formula of REIT? REIT is just a function of dividends. It cannot go up and up forever. So actually, it's vindication to see that the REITs are dropping down because, again, REITs are just REITs. Don't confuse yourself that REITs are growth stocks. They aren't. REITs are just bond replacements. Other than that, you shouldn't actually look at REITs as like a growth stock. And in terms of growth stocks, pangit rin sa growth stocks is that in a recessionary environment, they don't pay dividends. So growth stocks can fall 50%, like Converge. Converge is right now considered a growth stock. I would be careful on Converge, guys, because yes, while broadband is a wonderful thing, and we do need a lot of infrastructure investments in the Philippines when it comes to better connection, ingat lang. Converge here at 30 pesos, I think it is expensive. You might be able to see this at 25 or 21. I'll be very careful. So yeah, I'm just cautious. Can't say much when it comes to the Philippine market. Not really not really invested. And there's a reason why. There's a reason why. We don't invest when we think it's gonna go down. That's about it. Sige, that's it. Bye-bye.